Hey everyone, Sarah here with the Green Executive. And a very common question is, how do I figure out my labor burden? It can be a little bit complicated, but it doesn't have to be. It's three components that compose what we have to pay as employers on top of someone's wages. So here I am in LMN in the budget. Hop down to field labor, and that's where you first see the labor burden. So this labor burden, it's those three components composing what we are responsible for above and beyond wages. It's employer taxes, and that's usually a set 7.65%. So that covers just the employer portion. So we're not talking about what we pull from an employee's paycheck and have to send in on their behalf. This is truly what the employer is responsible for. It's a minimum of 7.65. There may or may not be something local that you have on top of that. So if you have tax that you're responsible for payroll as an employer above and beyond the 7.65, then you want to be sure and include that as well. You would probably know if you had that, and your payroll setup would definitely know. So whoever runs payroll would know if we pay something extra because of where we're located. Maybe there's an extra requirement when it comes to paying your staff members. But usually you don't have that. Just want to point out in case you do to be sure and include it. Okay, so that's the first component. Then you've got the unemployment insurance. So for most of us, that's a private engagement that you have, or I'm sorry, that is from the state, from the government. They're going to send you a notice that says this is your rate that you pay in for the following year. We usually get that in December. So if you don't have that notice that the state has sent you or can't log in and confirm what that notice has said, it should be set up in your payroll somewhere. And hopefully that was done when the notice came. So your unemployment that you have to pay in, it can vary from year to year. The more claims you have, the higher that gets. And then over time, those claims fall off and you're able to reduce that. So we want to verify what rate you're paying in for unemployment insurance, and that usually does run on a calendar year. The third component is workers' compensation. And in this context, we are in field labor. So these are our team members who work in the field, which will have a different workers' comp rate than our team members who work in the office or at sales. So we're only wanting to look at our field team members right now. We're going to do this whole math again when it comes to our overhead staff that happens down here. Here in field labor, we're talking about workers' compensation rates and weights that we pay in for our team in the field. So what you're going to do is you're going to reach out to your workers' comp agent or pull out the big packet of paperwork, and it's going to look something like this. You're looking for a declaration sheet or a deck page. Deck sheet declaration is what we're looking for, and that's going to have, now bear with me, this is an example one I could find online. But you're going to look at it and it's going to say, hey, we classify you these different ways. Here is the rate that we charge you for each of those different classifications. And here's the amount of premium or the weight that we give it. So we want this because we want to take this and get a weighted average. And then in the price list, we can use this as well to get really specific with our labor burden. So when we are looking at this declaration sheet, deck page, you need to get this from your workers' comp agent. And now your workers' comp probably doesn't run on a calendar year. And you can see in this example, they're looking at, just a quarter in this case or so. But it usually runs for a year, but not necessarily on the calendar year. So this is something you might want to update. If you're doing your calendar right now, maybe 3 months from now, you have your workers' comp renew. You'll want to come in and address these figures at that time too. So right now we're saying we pay in for this class or this particular example. This classification has a rate of 9.26. So what we're going to do is we're going to go out to a weighted calculator and we're going to plug in 9.26. Let me just clear all this out so it's not confusing. 9.26 is what we pay for our first field one. So you'll take your sheet and you'll highlight the field ones. This one's that first 9.26, and the weight that they gave it, or the amount of premium we pay in, is 413.98. 413.98. So the second one, for field only, 11.71. And I just went to Google and Googled a weighted calculator there. Don't do a grade one. You want a weighted average, just regular. 248.27. All right, so now our weighted average is 10.18. This is the figure I'm going to use and bring back to my LMN. And if it's 10.18, whoa, I'm just making a note here in this bottom line. So in this bottom line, I've got this asterisk to bump this note at the top, and I've made a note that, hey, what is my labor burden, this box we're talking about up here? It is the employer taxes, and I've noted what I have to pay in for that. It's the unemployment insurance, and I've noted or refreshed what I'm paying in for that. And then workers' comp, and I've made myself a note. How did I figure that out? So I found my deck sheet, declaration page, same thing. And I took the field classifications, emphasize that. And I found the rate and the weight that they gave it, took that information over here and plugged in that rate and weight to get a weighted average. Noting that here in this note and adding that 10.18 to my unemployment of 0.75, nice and low, to my minimum employer taxes of 7.65. That brings me to 18.58. So then I'm going to update that number here. And when I click away, watch what changes here. So when I clicked away, my wages stayed true. So the wages that were in this sample budget, my inventory of hours is true. My wages are true. This is all feeding from down below. And now this burden, this 18.58%, is added on top of all of those wages because these are truly paid in as a percentage of payroll. So we are factoring all of that in, and this gets above and beyond our wages. It's what we're responsible for as employers. Okay, so this math, check done for field labor. We mentioned if you come down to overhead, you see labor burden again. So it's the same math, same three components that we're paying on top of someone's wages. Employer taxes, that stays the same, whether they're field or overhead. Unemployment stays the same, whether it's field or overhead. But workers' comp is definitely different. So this should always be lower than your field labor burden. When we come to our declaration page, you might have multiple ones. Or if you only have one for your admin or sales staff, you won't need to go to the weighted calculator. If you do have just one, like in this example, our overhead one is just 1.17. So I'm going to take the 1.17, just plug it in there. That's my note. So I know what figures I'm using. 1.17 plus that 0.75 plus the taxes of 7.65. That brings it to 9.57. So I'm just making myself some notes here of what figures I'm using so I know how this was created. This note doesn't go anywhere. It's just for my reference so I know where the 9.57 came from. Now, if on my declaration sheet I had multiple classifications for admin or overhead, I would take those to my weighted calculator and refresh my figures here to get a new average. Okay, so check. Now we have our overhead labor burden. And you see labor burden pop up again. So when you go to your price list, labor, you want to update these. So you want to update these by recognizing that, hey, in my budget, I just updated my costs. So I'm going to have to update my costs by bringing in my fresh, up-to-date payroll information that you've already done that work on in the budget. So you would grab, okay, who would I send? Maybe I would send this person. It knows how much they get paid. If there's any bonus in the budget, it's factoring that in as well. And it knows how much overtime was set up in the budget. We already did that work. We just brought that information in here. And that is going to be then set here, refreshed, updating our cost. What didn't change is my unbillable and my labor burden. Those will never automatically change for you. When you're adding a new line item for labor, so if you're brand new to LMN or adding a new payroll type or personnel type here in labor in price list, it will fill it in for you. But if you're renewing, updating, you have to manually do it. Now, we could come here and say, well, it's the 18.58 on average from my budget. You could plug that in for your labor burden, or you might say, well, this is mowing. And I know how my labor burden is calculated. I know it's the taxes plus the unemployment plus workers' comp. Oh, but workers' comp is very specific. I know how my mowing team is classified. So you could come in and add your employer taxes, 7.65 minimum, plus your unemployment, which in our example is 0.75, plus however that specific mow lead would be classed. So you can come here and say, well, they're classed this way. Imagine they're the top one. So they're 9.65. Was that 6.5? I gotta move my calculator. Yes, 2.6. So they're 17.66. So I can come here and say, well, they're not actually 18.58. They're 17.66 because they're classed a very specific way. So if you feel comfortable using the company average, I would go with that. If you want to get more specific, by all means, do that formula for labor burden again and get super specific to what this role costs whenever we deploy this role. Now your unbillable, same thing here. You could use a company average that is in your budget in the analysis section. You could also get more specific for your particular labored item. Okay, I hope that helps. It seems to be a little bit of math there, but I promise you, you can do it, and then you'll be really confident in what your costs are.